Good morning, everyone. It's October 26th, 2021. I'm doing a little market review after the open. Wanted to go over some of the things I've been looking at. Let's start with TLT. Again, bonds, nothing really going on. You mean you're above the 200-day, the 20-day, kind of making higher lows off the bottom. At this point, rates don't look like they're going to do anything in the near term that are going to affect or spook the market. If rates go lower, will tech climb higher? Tech loves low rates, so worth keeping an eye on. The VIX, we've talked about this regularly every time it gets down into this like 15 area. It's pretty good support. I don't think the VIX is going to break into the low single digits like we used to see back in the day. Not low single digits, sorry, the upper single digits, low teen, like 10, 11 area. I'm not seeing that happening. I don't think we're going to get that. So I would just be aware that we're kind of at some levels that might spark your interest to hedge some stocks, take some profits. That's going to lead me into some of the next things that I'm going to talk about. A lot of people are talking about Tesla this morning. They got a $4 billion deal for 100,000 cars. We're in the kind of the blow off mode. Now, again, I'm not really going to pick the top here, but I'd be looking for the Fibonacci extensions as potential places that you might run out of steam, might be willing to sell some calls for as a cover call play to lock in some gains, or again, take a little off. The puts are very expensive, so it kind of puts you in a position where the market makers are gonna try to overcharge you for protection when it might be needed most. Just keep that in mind. Hence, I'd rather sell calls if you're going to lock in some gains. Again, we're in earnings season. The first little bit can be up, and then you can kind of chop through, and the first direction's up, then you're gonna have some down. I just keep an eye on it. I don't really have anything going on with Tesla personally, but looking at the stock, if I owned it and I had it, been holding it since earlier in the year, and you got in the 500-600 range, you're getting close to taking a double. The upside, I don't know. They added the market cap of one Ford and GM or something combined yesterday. I don't know what the value of the company is really worth at this point. It's just pricing in the future, and stocks really do that. And when they price in the future, at some point they have to earn it. When will they earn it? Meaning have to like produce the numbers to back up the valuations of the justification of such. Who the heck knows? I'm not really trying to pick the top, but again, if I own some, I would definitely be trimming here because bulls make money, bears make money, pigs get slaughtered. These kind of exhaustion gaps right here can be kind of one of the last exasperated moves. Look where the 1.618 is. I would be willing to bet we're going to take a break at some one of these fibs at some point. But again, be careful. It's one of those stocks that's a rodeo and a roller coaster. So look at the SPY this morning. It's gapping up after breaking out. We got over our inflection point. We talked about that. Two extension is not too far off at 460. Could we see that by the end of earnings or sometime soon? Likely. However, there's a lot of interesting things going about. Capital gains tax, unrealized gains taxes, all sorts of things. At some point, that will come into play if it is actually true, because people will likely take some gains at the current rates that are, passed by Trump, and reestablish cost basis next year if they can. Again, I don't really see it making too much of a difference until it does. As of right now, it's kind of a thing that I don't think will get through passing in Congress. So let's look at the Qs next. Qs are back at the highs from September at an old 3 extension fib. Yeah, this thing has been holding up pretty well, just like the SPY. You can kind of see where we were building off of these weird, I had such big fibs from here to here, and now we're up 3 times the down move from COVID, which is kind of an interesting extension if you kind of run that up. You can kind of see as we've kind of chopped our way. Could this be a topping area? Again, it really depends on how the rest of October acts. If October closes well, usually November is kind of a digestion month, and then you have like a Santa Claus rally. It's worth keeping an eye on. Let's go to good old gold today. For some reason, it's down in the AM. I have no clue why. Nothing says inflation is abating or changing. Now the debate is just whether we're going to have hyperinflation. I mean, I don't know how you control the monetary base for so long, just endlessly printing. I mean, there will be a loss of confidence today, tomorrow, next week. I have no clue. I have zero clue on such. However, they keep up the money spending. There's no paying off the debt. The only thing they can do is devalue it. That's why Bitcoin and a lot of these other uh, hedges for, I would say, inflation. I mean, I call Bitcoin an inflation hedge because it's kind of the same role as gold. It has some utility. It's not an overall adopted currency, but it's what people buy when they want to tell the central banks that people print money endlessly to piss off. So as you can see, we broke the downtrend the last couple of days, but now we're consolidating, and you got the 50 or you got the 100 day and the 200 day and the downtrend all in one area. There's gonna have to be something to really break this lower because as of now, all you see is higher highs and higher lows. It's channeling up. And this was the old downtrend. So again, on the day-to-day motions of things, I would just anticipate that we're going to continue to climb higher day to day. I can't tell you what days are going to go up and what days are going to go down, but it seems pretty obvious. You can buy the dips, especially if you get along this lower black channel line. Now that we're kind of funneling up. So take a look at silver real quick. Talked about this, broke the downtrend. Now back at the 100 day, just consolidating. Doesn't look like anything wrong. I like all this volume down here because you kind of formed. We actually did form a little bit of a head and shoulders bottom. You can see all the shoulders and head. There's the head. Here's the shoulder. Big fan of that. And especially when you start taking off from the head on the right shoulder with volume, that's usually a big sign of a capitulation and share grab by the market makers. Now they're able to kind of get what they want. And now people are starting to see that the game has been played and it's lock, set, match, time to go the other way. And that's been confirmed 20 to 2250. I mean, that's a 10% move in almost a month. Is that the best move out there? No, but if you're the market makers or you're playing commodities, a 10% a month move. Some people would love to make 10% in a year, so you kind of have to factor in what's going on there. Doesn't look too bad. Some of the stocks I like in that. You got AG, kind of broke the down channel. Looks very similar to gold in the sense that it's sitting up against the 100 day. I think you can buy that on the dip. I would not be surprised to see that back in the 20 range. They're cutting their production in the near term because they don't think the prices for silver should stay down here, which is kind of like, if you think about future production, that's what they're sitting on. They're waiting for that. So it's worth keeping an eye on. You got another one of our favorites, KL. I like it. Again, you had the W formation. We'll talk about another W formation coming up. Just making higher highs, higher lows. You're consolidating after the breakout, which seems pretty typical. You have some, this area, which was kind of the pre-news breakout that we thought they were going to get taken over. Actually, they did a merger with AEM, and you can see when it dropped on that volume, everybody scooped it. Scooped it up. They drank the milkshake. They're lucky to get in the 39, 40 range, and now they're up in the 45. They're not complaining about that 10% up. Let's look at X, because here's another, I think, potential W formation. Looks pretty interesting. You can see you got the left part of the W, and now we're forming the right side. This 150-day area is going to be a very important resistance area. If we can break over, just do a round number 25, should take off, and that can take you back up to the 30. That's 10, 15% potentially. I like the double bottom here, from July, retested in October. I know everyone's looking at the moving averages turning over, but you have to kind of just assume things and keep it simple. Just because moving averages turn over doesn't mean something's going to fall apart. And if you were trading that and you shorted this thing and you didn't cover any down here at 20, if you saw the 20-day cross through, now you're, you know, pissed off because we're back at 25 and you didn't take any gains. And you're going, well, the moving average has turned over, so I should have shorted. Again, if you shorted 20 going through the 200-day, you're eating shit right now. And excuse my French, but there's no guarantees. There's a lot of things that are high probability and you trade off of them. You don't ever assume that you're always going to be right. And that's the thing. It's a probability game. Talk about this endlessly with people. You're looking for circumstances that create probability that are going to work in your favor. And if they don't work and your assumptions do not play out, you just have to assume you're wrong. You just have to keep it really that simple. Set your stops, know your loss levels, know what your plan's going to be. Take a look at roadblocks real quick. I keep saying real quick, I apologize. We're right at the downtrend line. This area right here, 84. I mean, you can see very clearly. We've got multiple points of confirming the downtrends. It breaks. I don't know why it would continue. You do some fib extensions, and you run the numbers. You get 60 to 100, 63, 150 point move. You do 50 points from 70. It takes you to a $1.20. I'd be willing to bet $1.20. There's something up there that's interesting. Yeah, that would take you, up into this area. You started redrawing some new fibs. We'll see what else comes from this, because this might be the best way to get the extension. Oh, apologize, wrong one. A lot of features up there that you can get caught on. 120, the 1.5 fib extension. Now again, people go, oh, you're just drawing that to make it fit your thesis. And it's like, no, the computers and algorithms control the markets. They love Fibonacci numbers. They love the natural order numbers. They love, some sort of organization within chaos. That's what trading can be at times. And that's where I'm always kind of drawing the things and looking at them. How do I expect things to work out perfectly or to hit specific numbers always? No, again, nothing's perfect. You're always just trying to get close and trying to anticipate. But that's kind of what I'm looking at. Let's take one look at Apple real quick. You can tell it potentially could be a Head and Shoulders top. I was looking at this the other day. I mean, they're having production, issues with their new phone. They've kind of been giving it away based on the deals you see with AT&T, Verizon, T-Mobile, all of them. I mean, you just kind of got to use some sort of level. I would say, if you can get over today's high, it might break out, because that would be the shoulder line. Where could it take you? Upper 150s, or maybe it's starting the next uptrend. Always keep this in mind. If you have a Head and Shoulders top that is violated, meaning it's not a top, it usually starts a monster run, because all the people that sold and shorted, you can see there's a big VAP zone here, so volume at price, they're all wrong. And if they sold and short, and now you're starting a new uptrend, all that volume, maybe say not all, but a lot of that volume is going to chase back into the stock. If it chases back into the stock, you're going to get some big rips. And so if you kind of anticipate, if you want to draw this out, you can see there's a little bit of a channel going on here, some sort. I would, it's not a perfect science again. I like to kind of just draw things as I see them, knowing that they're not exact. We're not drawing hard lines for hard entries, hard exits. What if it ran up into the end of the year into the 170s? Would that be crazy? I don't think so. Maybe, again, in a world where the central banks control the money policy, the monetary policy so effortlessly, they can create these stampedes. They can create market action that just, there really isn't any logic. I mean, I don't know how to price some of these stocks when you look at the future earnings. I mean, what are future earnings when you're losing money now or projected to make some money in the future? Saw this in the dot-com bubble, very relatable to now. But when does it end? I don't know. It's different. When you had the dot-com bubble, you had a little higher interest rates and you lowered them to zero after the fact. That was to stabilize it. Well, coming into this mess with zero interest rates, basically on the zero bound Fed. So as I've said, we could always have the Tokyo Nikkei kind of blow off stock market move where everybody chases and gets their heads, spun by how high things go. Because the best price, the best advertising for higher prices is always higher prices. So get more people to chase when something moves up. So that's where we're at. The economic data that's coming in, home prices this morning, Case-Shiller, numbers in near the 20s. It's crazy because I remember many years, fives and sixes were a decent housing market. Coming off of the 20 mark, could that be the blow off in housing? We'll see. I mean, there's a shortage. A lot of you guys know I do real estate as well, and good luck trying to find a home. I mean, it's just a national shortage where I'm at. 1 month supply, 3-year demand. You do the kind of math, you start realizing, home prices, whether you think they're overvalued or not, there's always a buyer. Think of it as a stock where on any dip, there's always someone there willing to buy. That's an issue. Let me say one thing before I get going here. If you notice gold here as of what time is it, 10 a.m. East Coast, it's kind of just chopping here. It's not really going anywhere other than hanging out here. But I am watching some of the miners this morning. If you can see this like green, it means they're hitting the high of the day. Not KOs. I saw some of these. Yeah, Silges here. Mags hitting the high of the day. Rand Gold hitting the high of the day. I mean, keep an eye on that. When you see a divergence in the metals price versus the miners intraday, it's usually telling you one of them is wrong and one's about to flip. So either miners are about to tank or gold's about to rise, and they'll all rise. They'll all kind of funnel together by the end of the day. Well, I hope you guys have enjoyed all this. If you like to, again, I'm starting off the videos a little rough on the edges. Please feel free to add some comments, questions about specific stocks. Let me know. Try to improve the quality of all this the more I do this, and especially if I know more people are interested. For me, it's a good reason to review the markets in the morning and give people my insights, kind of the things I'm looking at. And again, remember, I don't trade every day. Day trading, if that's going to be your job, think of it as like a professional gambler. I've been there, done that. I do enjoy times where I can spot things that are seem very obvious, but I'm more of the patient type that where, say, if you saw a KL on the day that they announced their not earnings, the merger with AM, that's a good day trade. I know coming down to the 200 day, for example, it's going to pop. I like to wait for allocations of the market short term versus trying to play the day to day movements because on the average, the day to day movement, the high and the low can be in the first hour of the day of market open. And after that, kind of a soft market. So if you're playing options, you're playing very risky stuff, you're going to get your options premiums whacked pretty hard as the day goes on. So I prefer playing stock for day trade. And a lot of people don't have the account balances to kind of play that, but you 2, 3, 400, 500 shares, moves a dollar, boom, you get your dollar. Where if you play some of the options and you start doing options and you don't get the delta that you're looking for because your options are not deep enough in the money, you might get decayed out and only make 30, 40 cents. So again, for each their own. If you have more questions about any of this kind of stuff, feel free to leave comments, questions in the below, and I'll try to answer anything I can. Again, I'm here to help other people. This kind of stuff makes, I've been doing it for 20 years, kind of seen everything. Nothing really surprises me, but then also the market always kind of is surprising you. So hence why the risk versus reward profiles and knowing your downside. Anyone who says they can predict the day-to-day motions either has inside information or works for the central banks. Who knows? Anyway, Dan Max checking out. Later, guys.